Welcome everybody to today's capital raising show. I'm your host Tim Mai, and today I have an amazing guest on the line with us, Mr. Neal Bawa. Neal is a technologist who is universally known in the real estate niches or real estate circle here as the mad scientist of multifamily. Besides being one of the most in-demand speakers in the commercial real estate field here, Neal is a data guru, a process freak, and an outsourcing expert. Neal treats his billion-dollar multifamily portfolio as an ongoing experiment in efficiency and optimization. The mad scientist lives by two mantras. His first mantra is that we can only manage what we can measure. And his second mantra is that data beats gut feel by a million miles. These mantras and dozen other disruptive beliefs drive profits for his 700 plus investors. Let's give Neal a big welcome, y'all. Woohoo!
Thanks for having me. Thanks for having me.
Yeah, definitely. Thank you. Thank you for being on here with us today. I've heard you on a podcast with Ruben Grath. I saw you spoke at Race Fest, and the stuff you share and the level of geekness that you geeked out on, the level of nerd that you geeked out on these things is so impressive. And so I, normally I have a set of questions that I go through, but today I'd love to just dig deeper into all the different stuff you do around marketing for passive investors. I know your portfolio is like a mile long of all the properties you've done, and the millions and $1 billion worth of portfolio that you're managing. And so Neal, let's start out. If you can share with us a little bit about how you got into this industry, coming from a technologist.
I'm a tech geek, so data scientist. I've had a successful tech career. I've had a successful tech exit. The first 6 years of real estate were just my own money. A little bit of my mother-in-law's money, but mostly just my own money. I didn't take money from anyone else, and got into real estate because my the founder of that tech company, the senior partner, I was a junior partner in that tech company, gave me the opportunity to build a campus from scratch. So, most people, when you ask them, what was your first real estate experience, it's usually a single family rental. My first experience with real estate, cash flowing real estate, was a $10 million, 32,000 square foot campus that I had to build from scratch in
Oh,
the
wow.
evenings while running a company of 400 employees during the day. So that
Wow.
was the job that was given to me, and it seemed to be an insurmountable job. But luckily, the CEO, he was brilliant. He knew a lot more than I did, so he taught me, a bunch of things as I went along, and drove the project together with me. And when I Before we continue, let me take 60 seconds to tell you about Multifamily University. Are you ready to take your real estate investing to the next level? Look no further than Multifamily University. Our comprehensive resources, including guest podcast appearances, educational webinars, the Real Estate Trends Toolkit, and the Location Magic course, are all designed to make smart investing easy and accessible. Plus, with no subscriptions, no upsells, you can trust that we're always looking out for your best interests. But don't take our word for it. Check out what our satisfied customer, Carlos M., had to say. Neal's presentation was filled with invaluable information that is not readily available to the average investor. This group takes you to the elite level of investing. Join the ranks of the elite with Multifamily University. Join us at multifamilyu.com and start investing from a place of knowledge today. Not only will you have access to a wealth of knowledge from industry experts, but you'll also be able to stay ahead of the game with our in-depth analysis of market trends and potential recessions or corrections. Invest with confidence and make informed decisions based on data, not gut feel. Don't miss out. Visit us at multifamilyu.com today or click the link in the description below. And now, back to the content. I finished the project. I realized the astonishing tax benefits. I live in Taxifornia, so, as a technologist, I give more than 50% of my state and tax salary as state and federal taxes, and once that building was finished, all of a sudden my taxes fell, very quickly, and I was like, wow, what is this? How did this happen? And so I got into real estate for tax purposes. My timing was really perfect. I started studying real estate when the building was completed. That big building was completed in 2008, and so I started studying the market. Then the crash happened in 2009. Because I'm a data scientist, I started collecting information from lots of different websites, including Zillow, or the predecessor of Zillow, the Bureau of Labor Statistics website, and a bunch of other sites that existed back then, and put them into a statistical analysis software called R. It's actually, for anyone that's in the world of statistics, they know exactly what I mean. The software is called R. And then we started using a programming language called Perl to churn through the data, right? So without kind of boring you, my goal was simple. I wanted to figure out if there were patterns in the data. Neo reads the matrix, right? He's looking at
Mhm.
the matrix and he's reading the matrix. I wanted to know if there was a real estate matrix and if I could read it. And I had no idea how to make that happen, except that I wanted to gather as much data from as many different sources as possible, stick it into the software, play with it 1,000 different ways, and see if there were patterns in it. As it turns out, there were patterns, and some of these patterns are well understood by all of the people on this call. It seemed like profits in real estate were tied to things like, increase in population and home prices and increase in jobs. But those things really weren't magical enough for me. They were simply indicators, right? So I became obsessed with the idea of how much home price growth, how much population growth. How do you rank stuff? What's more important? Is it jobs that are more important, or is it population growth that's more important?
Mm.
Or is it crime, or is it schools? I mean, what really correlates to profits more than any other thing? And so that obsession led me to creating a course, and today that course has 11,000 people that are taking it currently on a
Wow.
website called Udemy. So if you don't know what Udemy is, check it out, udemy.com/real focus. So one word, real focus, hit enter, and you'll see about 11,500 people, all real estate investors taking the course currently. Back then, it was just a set of ideas, and the first time I presented it, I had four people in the room, very dorky, geeky people. All of them were data scientists. And we had a blast. It took 2.5 hours for me to present it. Now I usually present it in 30 minutes because I've distilled it down for the common man. It's no longer a data science audience. And that's really how things started. And then I ended up using that to figure out the most profitable city in the US at that point. Luckily,
Mm.
it was in California. I live in California. So it was 144 miles away. It was a city called Madera, California, where Kaufman and Broad had built thousands and thousands of homes and sold them to agricultural workers who really had no income. And of course, those people left. And Kaufman was forced to sell these gorgeous homes that probably cost him $250,000 to build for $100,000 to cash buyers like me. So I bought as
Wow.
many as I possibly could, dozens of them. And that started my real estate career. Not from a perspective of other people's money, but just from the perspective of my money.
That is awesome. And then when did you get into your first multifamily or commercial deal?
So we sold my company, the technology company, in July 2013, and that was also the year I got involved in my first deal with other investors. There were three other investors in that deal, and it was a 12-unit multifamily property. And then sort of started to scale from there. I realized after selling the property that I didn't want to stay on, for another run. So I chose to just invest a bunch of my money, the money that I'd made from selling the business, back into the business because I believed in the business. They sold again in 2020, and I received a very hefty amount of profits from there. So that was a good decision. But then I started to exit, and that process of exiting took a while, so it didn't happen in 2013. And so I started preparing for it. Luckily, I didn't have to prepare much, Tim, because I had been running a meetup group inside of that technology business. We had large classrooms, so I was basically doing this. So a lot of people were like, how many meetups did you go to? And my answer was hundreds. But for each meetup, I just had to walk 150 feet from my corner office to the classroom. So basically, what I did was I offered all of the people in the Bay Area that were doing meetups to do a meetup at my
Mm, that's smart.
site, and so there were lots of different meetups, and there were multifamily and single family and flip meetups and lending meetups, and everyone was using my beautiful facilities that I'd built. Remember, I built those
Yeah.
facilities myself 10 years earlier. And so people were coming in. I was becoming this aggregation point, And people started inviting me to conferences because they were like, this guy's a geek, he's got some really cool stuff. And so I started to learn how to talk to non-geek people and make them understand all this geeky stuff that I was talking about. So that was a process I went through. Trust me, if you watch one of my presentations from 10 years ago, it's pretty boring. Because I was only interested in talking to data scientists and geeks, and it's a completely different language. So 2013, 2014, 2015, by 2015, my transition was complete to becoming a real estate syndicator. The database was already there because it came with the meetups.
That is a super smart strategy. I unknowingly did something similar when I first started real estate back in 2002. When a lot of you guys know Quest IRA now, they're big now, but when they first started, Quincy Long, the founder, was my real estate attorney here in Houston. And so the first year of Quest, they did their meetings out of my office. So I had all the money I could ever needed for all the single family fix and flips I was doing that lasted for me for years. So that's really cool that you intentionally did that. Great strategy.
It worked
So
out. And I think that what people also like, my location was also very lucky. I mean, the property was in Silicon Valley. Can you imagine how many rich
wow.
geeks and dorks are around? I mean, if you throw a rock, you're going to hit two accredited investors.
That's amazing. That's all. I love that. And, obviously, when it comes to buying properties, you do a lot of data study. What about your passive investors, your high net worth individuals? How much do you study into, who they are, how to find them? Do you have like an exact avatar that some people, like they can name their avatar, they can tell you, what nationality and all of that stuff. Do you geek out at that to that level with your investors?
I wouldn't be much of a data scientist if I didn't geek out on the second most important thing that I do. The first most important thing that I do is buy or build appropriate properties and obviously make sure that I'm doing that part right. Because without that, what is the point of having investors? You're not going to make any money if the investors don't make any money. And then the second most important thing that I do is everything related to investors, right?
Mm.
So I don't know of any other thing that is anywhere as close as these two things. So I think absolutely, I think that we've got about 18 people in our marketing team. So, including myself, I consider myself a marketeer. I spend 10% of my year being a marketeer, 90% being a syndicator. But that 10% is very important. So, yeah, I spend about 250 hours a year doing things like here. Right now, I'm being a marketeer, right? So, I'm marketing my skills, my abilities, my experience to 73 people at one go. So, absolutely. I study my investors. And I slice and dice my investors in every way which that's possible. And a lot of people here might say, yeah, you do that because you scaled and you're very large. I find that in general, this is a group of equity raisers, right? So these are
Yep.
people raising equity or wanting to raise equity. There is this tendency, very strong tendency, and I'm looking at everybody here right now. I can see your faces. Don't tell me that you don't think that way because I absolutely know you do. That there's this tendency to say all of the things that he's talking about, you can only do it if you're as big as him. And
Mm.
that I can tell you is complete garbage. It's complete nonsense. The methodology comes first, then the money. What you can do is say, I'll raise the money first, then I'll develop a methodology. Well, then you never will develop a methodology because you'll never have the time. So I was studying accredited investors as early as 2014, 2015. I was trying to figure out lots and lots of different things. So I'll just throw this out there, and I know Tim has more questions on this, but I'm just going to throw this out there and say this. What you need to understand is the answers to questions like this. These are questions. I'll give you answers if you want them and if you have time. What percentage of accredited investors are in which job? How many are CEOs of companies? How many are doctors? How many are lawyers? How many are in this vertical? How many are dentists? How many are chiropractors? Right? What are the top jobs that lead to people being accredited investors?
Mm.
Those questions. Then where do accredited investors go to when they want to invest? What are their patterns? What is their way of thinking? Right? What attracts them? When you say, if I made three statements, which of the three statements would be most interesting to my target audience? Right? And and then amongst those accredited investors, let's slice and dice and say which ones are more data driven and which ones are more hype driven. Because we all know this, that a bunch of every investor I've ever come across says that they're data driven. It's nonsense. Actually, about I would say 1 out of 10 investors are really data driven, and 9 out of 10 want to feel like they're data driven. I was more interested in attracting that audience of people that were data driven because then I would get money from them again and again and again and again, right? So how do I tell if an investor is data driven? So I've been slicing and dicing all of these people. Here's a question that I have for for this audience, right? Do you know the people that are in this room right now? Do you know what their net worth is? My answer is I always know every room that I go into. If I have access to people's email addresses, I know what their net worth is because I
Mhm.
pay for expensive software that tells me net worth. And then I recently did an event, and I don't know if any of you were there. Bronson Hill, and invited me to do an event. Ken McElroy was there. Was there anyone here that went to that event, Bronson Hill's event with Ken McElroy? So I will share with you that because on that event they shared the list of people with me, and I can tell you what the um, net worth of accredited investors was. So I'm just going to read this off. Um, Total number of webinar leads from that webinar was 824. The number that we enriched using our database, I'll explain what it is because it really goes to Tim's question, was 105. So 12.7% of those were matched, which is a pretty typical rate. Accredited median net worth was 2.6 million, and accredited max in the room out of those 824 was 21.2 million. So this is a perfect
Wow.
example of a webinar that I just did, right? Where I basically went through the process of figuring out how rich or poor this audience was. Now take that idea, Tim, and repeat it hundreds of times over the last 10 years, and you'll have the answer to your question. I do it
Mhm.
all the time.
Wow. So what tool is that? What service is that you're using to do that?
There's a lot of services. There's Wealth Engine that you can pay for. One word, Wealth Engine. There's a very expensive software which is in the hundreds of thousands of dollars called Windfall. All of these softwares are useful. When I got started out, the number of people that I had to deal with was less, so it wasn't hundreds of thousands of dollars. It wasn't even tens of thousands of dollars. But the goal is to profile your investors and understand what percentage of each audience that you could go after is accredited, right? So I think that, I'm going to mention a few things today that will shock you. And one of the things that will shock you is once I know that someone has an extremely accredited conference,
Mhm.
a set of investors that are following
Mhm.
them, I try and figure out how to get access to that audience. So, you could, and I try to advertise and I try to promote myself to that audience.
That's really good. All right, let's go back and answer all of your questions. The questions that those were super interesting. So your first one was what was that first one again? About
Well, what percentage, like I'll give you examples, right? Examples are always more fun. Um, what is the single greatest profile of investor that will give you money and keep giving you money?
right.
The answer to that question is doctors. And a lot of people here would be able to understand that answer and know that answer, right? So people are nodding because they're like, yeah, doctors make sense. There's a couple million of them, so there's a lot of doctors. The vast majority of doctors in the US are accredited, and they have severe W-2 issues because a lot of them are still working for a W-2 job. Maybe they have $300,000 a year that they're making. Maybe they live in a place like California, and so they have very high taxes, so they have a strong need for depreciation, et cetera, et cetera. So far, everyone's following me, right?
Yep.
This is all obvious. So tell me, and I'm looking at you, I can see you, right? Those of you that have their cameras on. So it's useful. I also want to learn from you. I'm here to gather data. How many of you have actually run projects that were tens of hours or hundreds of hours where you said, I'm going to target doctors? Because it's obvious to you that doctors are a great audience. So what have you actually done? How many of you have spent time on targeting doctors like me, right? So Ashok has, Priyanka has. So these are folks that have actually spent time targeting these. right? And you might say, how do you target doctors? Well, there's dozens of different ways that we've targeted doctors, dozens, right? Absolutely dozens and dozens and dozens of different ways. One of them I showed off at RaiseFest, right? So I showed you at RaiseFest how people watched this live. There were 500 people watching it live. So that was one good example. And so I'll repeat it for you, for those of you that were not at RaiseFest. I basically mine LinkedIn. You can go to LinkedIn, you can find doctors, you grab and then you mine them. LinkedIn will not give you their email addresses. So you grab the email addresses from a third-party software, which for a moment, Get Prospect, which is a plugin into LinkedIn that gives you email addresses for those doctors. Now, if you send emails to them directly, within a day, you'll get banned. So I send those emails out through a software called Eventbrite. I think most people here know what Eventbrite is. But when you invite people from Eventbrite, because they're afraid that if they unsubscribe, they might unsubscribe to Eventbrite, not to you, they don't unsubscribe. So you don't get flagged. So you can basically invite them over into your events. So Eventbrite is one channel. I have 26, 27 different channels like Eventbrite. I don't disclose all of them, by the way. Um, and the goal is, on the one side, you have to have full-time employees, and most of my full-time employees that do this are in the Philippines, who are, I create a profile of a certain kind of investor. I look at, and then I tell them, go mine these. Then I use my enriching software. I just gave you two examples, Wealth Engine and Windfall, to enrich those databases and figure out what is the average net worth. Sometimes the average net worth is much lower than I'm interested in which case I
Mm,
throw away that profile and start over again with the next profile and the next profile and the next profile, right? So bottom line is, investors are everywhere. There's got to be somewhere between 5 million and 10 million accredited investors in the US. And that's why I've never gone outside the US. I've never taken investors outside the US. I believe that's one of your questions, Tim. Simply because I felt like I could do better with investors in the US. I also track repeatability. Let's say that you guys have investors. Let's say you're not like me. I've raised about 280 million, but let's say you've raised 5 million. Okay, and you raised that 5 million across 5 projects. I want to know how many of you have gone in and looked at those 50 investors and said, I want to know who my top investors are, the people that gave me money 3 times or 4 times or 5 times. Have you gone in and looked at them? If you have, you get 10 points. But if you've gone in and looked to see what was common amongst your top investors, then you get 100 points. Because now you're being a data scientist. You're basically saying, I don't just know my top investors, I know what kind of people they are. Because what you're also looking for is, which kind of investors gives me money again and again and again and again, because velocity of money is extremely, important. And I'm very obsessed about velocity of money. It's not important to me to get investors to invest. It's important to me to get them to invest again and again and again. And that's why I have the highest check in the industry. So no one in the industry comes within even 50% of me in terms of highest check. So my average
mm,
check since the day that I started is $140,241. I'm reading, it's on another screen here. Um, and you might say that doesn't seem too high. Of course it is. When I started out, I was expecting $25,000 checks, just like the
mm.
rest of you. So the average builds up over time, right? So it was 25, then it was 50, then it was 100. And so it builds up over time. And so if you look at the last 2 years, I'm sure that average is $250,000 per check.
I see.
See what I mean? So it builds
Hmm.
up over time. And how do I get to that level? And that's trust. I mean, completely different question, but I hope you understand what I'm talking about here. You, anyone who has leads needs to slice and dice those. If you have investors, you need to slice and dice those. And you need to figure out, am I spending my time on a worthwhile or a worthy activity? Right? I can tell you this audience is not a very rich audience, right? Why am I here? Because I have to contribute towards the industry. I have to do my job of helping other people move ahead. So this is my
Mm.
pro bono time. You know what pro bono is if you're a lawyer, right? Lawyers give out a certain percentage of their time to do good things. I am contributing to the community. But this is not a high net worth audience that I want to be typically presenting to. So I get obsessed about those audiences. Like I'll tell you an
Mm.
audience that's really awesome, that's a high net worth audience, IRA companies. So I write gorgeous presentations that I pay tens of thousands of dollars for, and then I systematically go after every IRA provider in the US,
Mm,
systematically. I've got a list of every one of them, right? You might say, I know half a dozen IRA providers. No, I actually know every single one of them because the sort of questions I'm asking are, where's the list, the master list of anyone who wants to be an IRA provider in the US? Those are the kind of questions I ask. Well, as it happens, there's a government website where anyone who is an IRA provider that is a custodian has to be listed. So now I
mm,
know that. And so I create a process, a system where every 3 months I go in to that, or not me, somebody in the Philippines goes in, grabs that list, cleans it up, figures out if their email addresses, there usually are, and now I have an IRA database. It's not in my main database. I don't send them my usual spam. It's in a separate portion of the database. They have a tag called do not promote. You know what that means? They don't get my spam, right? But that database is there. And now I'm trying to figure out how am I going to access this database, right? How am I going to build a relationship with these people? So I assign a person to profile their CEO, to profile their COO, to profile their director of marketing if they have one, because a lot of IRAs still need to promote themselves. So they have a director of marketing, right? And then I start taking my content, and I've built a massive library of content that's very impressive. And I start sending that to them, but not as an email blast. I write an email that is specifically for them. I reference something that is interesting to them, like, hey, it was, I noticed that you were at so and so conference last week. How did it go? Blah, blah, blah. And then I basically start sharing things on my own. So now I'm basically being a salesperson myself, manually, one at a time, having a conversation with somebody. But once I get in through the door, like Entrust, I'm in through the door, right? They don't allow people in. They haven't added any speakers in the last 3 years. The last time they added speakers was 4 or 5 years ago, and I was in that group. Now they reach out to me 4 times a year saying, hey, what are you presenting for us next? So
mm.
now I have access to thousands and thousands of accredited investors who have money in IRAs and solo 401ks, and I can access them, right? So you notice that all these examples are meant for you to think about this. Ask yourself questions. Where are all the buckets? Write down the buckets. Then sit down and say, how do I attack each bucket? Right? Because there's so many different buckets. And then once you get access to one bucket, how do I measure that against any other bucket so I can figure out what's the best use of my time? And if you don't figure this out, then you'll never get to the point where you can raise hundreds of millions of dollars.
Wow, that's
Capiche?
awesome. Yes. So, what would you say? There are people who are not data scientists like you, and so they go after affinity. So, for example, I'm Vietnamese, so it's natural for me to approach the Vietnamese community or the Asian community. I'm an entrepreneur, so it's natural for me to go after the entrepreneurs, the business owners community. What would you like? How would you compare that versus the way your approach, which is where all the accredited investors are at, and who are they? Let me go after them, the accredited investors versus the affinity market.
The affinity model, is an easier model. It's easier to get a start with affinity, but I can tell you it's a drug. So it's just like any other drug in that it addicts you. Once you start realizing that you can get money out of the Vietnamese community, you're going to be predisposed to that. So I'm an Indian, so as you can imagine, I have lots of Indian investors, but I think you'd be surprised to note that the vast majority of my investors are white people, right?
Mm,
And a lot of them are doctors and lawyers. That's sort of filters that I want. So I don't have a huge number of Indians. And you might say, why? I mean, you live in the San Francisco Bay Area, there's Indians everywhere. And the short answer is, I've never paid for an Indian event, even though there are fantastic events here like Thai, which is the Indian Entrepreneurs Club. It's only 15 minutes from my house. I've never paid for a seat because I feel like once you get addicted to these things, you start ignoring all the other things that you could do, and you don't deliberately change yourself. You don't make the hard change to
mm,
make the necessary changes to make yourself attractive to all those other groups. So it's a good way to get started, but I'd like you to get away from it as quickly as you can, because what you want to do is say, what makes me attractive to all these people? What makes me different from other equity raisers, right? And there, I'd like to give you a little idea, and maybe this is in another question. The big question I want you to ask yourself is there's like, there's 78 people right now. So there's 77 or 78 of us that are equity raisers, right? What makes you different from others? That is a very important thing. People are so obsessed with copying what everyone else is doing, they don't do things that are different, and it becomes very hard for them to stand out in a crowd. I'm highly, highly obsessed with doing things that are different. Have you noticed, for example, I don't have a podcast? You might say you have a huge audience. You have all these people following you, thousands of people on your YouTube channel, tens of thousands of people in your database. Why don't you have a podcast? My answer is I do. I actually have the most popular podcast in the industry that you've never heard of. It's called Everyone Else's Podcast. Have you heard of it? Everyone Else's Podcast? It's pretty awesome. It's pretty awesome. I actually have 200 people working for me. People like you.
I love that. That's good. That is so
Right?
good.
But the key question is, I mean, is it easy to get onto other people's podcasts? No. So I have to sit down and every week create new content for what am I going to discuss in the podcast of the week. Because what I can't do is discuss the same content that I had the week before. Because if I do, then people will not call me back. I'll get through the people's podcast once and then I'll be done. But to get indexed on Google, to get all the benefits, I have to never stop doing podcasts, right? So
Mm.
on Mondays, I do either two podcasts every Monday, and this is one of them. Notice, well, Tuesday in this case, because yesterday was a holiday. Um, and so I'm doing two, and in the evening at 5 o'clock, I'm doing a webinar. So I'm doing two events every Monday, and usually there's another one at some point in the week. So I have my week structured where I'm doing these events. And when I looked at podcasts, what appeared obvious to me is that while podcasts are fun and they're a great way of growing your audience, you more so than your audience, you're growing the audience of the people that come onto your podcasts. So it's productive and counterproductive. So the question I ask myself is only get the productive part without getting the counterproductive part. And the answer was become an expert podcast guest. I'm the industry's biggest podcast guest because no one else has guested on 200.
Hmm. That's good. I love that. So what about, I know, I want to circle back to the affinity thing. Is it possible to match the data scientist part of your teaching with the affinity? So like in your case, you would target, Indian doctors, for example. Do you do that kind of matchup at all? Or do you,
I,
or would you recommend it, or is it too niche?
it's too niche. What I find is that it's convenient because you can target quickly, but you run out of people, right? So there's saturation that occurs very quickly.
Mm,
So we have one of the things that I did was I divided my marketing team. And by the way, right now, guess what? You have a marketing team. It's you, right? So you just put time slots on your calendar to do these various activities because that's how I started. Nobody starts differently. Nobody starts with a team. But currently, I have a team, and what I found was the team was so focused on things like newsletters and webinars and cleaning up the database that I couldn't get them to do what I wanted them to do, which was to go out and build these investor profiles, build these buckets, right? So I
mhm,
separated the two teams. So I now have a team that is basically a database growth team. And then I have a everything else marketing team that represents, that's like everyone else's marketing team. But this other team, their only job is to figure out how to grow my database to create new profiles of investors. And I think that that's the part that most of you probably don't do well. You're spending a lot of time on what's in front of you. A lot of people do what I should be doing today well. But you have to do what I should be doing for today and what I should be doing for next year at the same time. And I do that by time slicing. I use my calendar to allocate times. Some times are tactical. What am I doing to get investors this year for this deal, this current deal? And then the second part is what am I doing to get investors next year or the year after? I don't think that most of you are doing that second part.
mm,
You're so busy. Every time, every second is so focused on today's deal that you're not
Hmm.
building out that structure for tomorrow. And
Right.
that's a huge mistake.
Right. Yeah, that's good. What about buying accredited investors lists? There's a lot of list providers out there. How can we best decide, what who to buy it from, and are those lists worth anything?
I find them to be quite worthless because most of them, the email addresses are bad. And if the email addresses are good, you can only send them emails once before you get banned. So I think you could potentially use the Eventbrite strategy that I discussed at RaiseFest.
Hmm.
Still, the returns are low, the costs are high. I haven't found them to be very useful.
Gotcha. Okay.
I've
So,
tried I've tried multiple ways because I feel like, there must be a way to make them work. I haven't come across a way to make them work. If any of you know, please educate me.
your two main strategies then is LinkedIn and podcast guesting and speaking opportunities?
Um, but you could say that, but the answer is no. I mean, my primary strategy is actually webinars because one of the key things is that there's channels and then there's nurturing. A channel brings a person into your sphere of influence.
Hmm.
Nurturing turns them into an investor and a repeat investor. And my primary channel of nurturing is custom webinars that I write where I don't take the content from anybody else. I write it myself. And I spend a great deal of time doing that. And you might say, where do I find that time? Well, I'm not speaking to investors, I'm creating webinars. When I started creating these webinars, I'd get 30 people watching them. The last webinar I did, I had 800 people live, and that was last month. And then about 600 watched the replay. So I was influencing 1,400 people at the same time.
Mm.
That's insanely high efficiency. I got there by putting in the hard work and starting from 30 people a webinar, right? You build up over time. So the answer is, webinars are my nurturing methodology. Podcasts are a way I add people into my funnel. I also add people into my funnel from everything, including Facebook ads. Um, I add people into my funnel from um, a YouTube channel. So you might say, oh my God, where do you find the time to do YouTube channels? My YouTube strategy is deceptively simple. Yeah, I'm very successful on YouTube. I have 7,000 subscribers. I have, hundreds and hundreds of thousands of views. But the YouTube content strategy is crazily simple. I create 0 seconds of content for YouTube. However, every time I do a podcast appearance, I have a team of people who have a set of written processes where they take the incoming video and then they listen to it, and using a series of rules, they figure out which few minutes were most interesting. They also put the entire video, the 1 hour podcast, up on my website because Google likes long form content for search indexing. But we also take 4, 5, 6, 7 clips that are 2 to 5 minutes long, where I'm talking about a particular topic, and we turn them into videos. And that's what you see on my YouTube channel. A lot of you are like, this dude, he does, all this stuff. Where does he find the time? The answer is it's the same stuff. We're just repackaging it 12 different ways,
Right.
right?
That's really
Same
good.
thing with my webinars. You take the webinar, you take individual slides, you turn them into videos. They might be 1 minute long, and that goes onto the YouTube channel as well, right? The big question is a lot of people are like, yeah, but YouTube, it's very difficult to find subscribers. The answer is the same. How many of you have gone to udemy.com? I'll keep referring to this website because I learn a lot from there. How many have gone to udemy.com and said, let me take a $15 course on how to build my YouTube channel? I have taken that course, and the course says that you need one long form content per week and two short form contents every week for Google to give you max indexing,
Mm.
right? Because I'm not actually promoting my YouTube channel. So these 7,000 subscribers, they came from somewhere. Well, they came from Google. And so I take a $15 course that tells me what to do. And then I sit down with my team and say, how do we get to this exact volume? And then We let it build over time. The first year, I only got from 0 to 500 subscribers. The second year, I was at 2,500. Now I'm 7,500. And so it's been a 3 year journey, but obviously the third year was the most powerful.
Gotcha.
Does that make
That's
sense?
yeah,
So,
that
I mean,
makes a
the
lot of
list of
sense.
channels is, I mean, everlasting. Like Udemy.com, I have the most popular real estate course on their whole damn website, and they have hundreds of real estate courses, right? That's because I provided unique content. No one else has a location magic course on their website, provided unique content, and I use those content, and they don't give me email addresses, by the way. So all these people that have taken my course, I had to figure out how am I going to get these people into my
Mm.
database? They came and took this course. The answer is they allow you twice a month to send emails to these people. So, which emails am I sending to them? Well, for all of my webinars and podcasts and YouTube videos. I'm not creating new content for them. I'm just inviting them to existing content. So now hundreds and hundreds of those people are coming over and joining my database and becoming opt-in. So Udemy is what is known as a cold channel for me. Got it?
I
So I
see.
have lots and lots and lots of cold channels, and then I have nurturing methodologies like webinars and podcast pieces that I put onto YouTube. All of those pieces, you might say, how does this guy know this much? The answer is udemy.com. I go every time I have a question, I go and see if there's a $15 or $10 course that I can take that teaches me how to do it. And then I force my employees to take the same course.
That's good. I like that.
Yeah,
Yeah.
I'll tell you what the latest course was that we are mandating in our company. How to use ChatGPT for marketing. So that currently is a mandate for everyone in our company.
Yeah, that's great. I've been playing around with ChatGPT and it's so amazing. Oh my goodness, the kind of stuff that it can do. And the better you get at at giving it specific prompts, instructions, the better results it gives you. It's absolutely
I'll give
amazing.
you an Then I'll give you an example of that, right? So everyone here started to smile when I started talking about ChatGPT. I can see you guys, right? So everyone was like, they had this smile. It's like, oh yeah, Neal Bawa obviously would jump on ChatGPT. But the question is, how many ChatGPT courses did you take? Did you? So I'm going to go back to what Tim said 30 seconds ago, right? This is about what is known as progressive thinking. So Tim said, and ChatGPT, a lot of the magic is in you getting better at giving it prompts. Well, did you check to see if people on the web have already written professional prompts for the kind of activity that you're interested in? Would you be surprised to know that there's over 100 professionally written prompts being given away for free? Just type in ChatGPT prompts for every job, and
Mm,
then you take that prompt and then you just modify it for your use. So you just copy paste the entire prompt, which is like this long. Why? Because you're trying to be as descriptive as you can be for ChatGPT to do its very best job for you. So the prompt is the key. And there are people who've written magnificent prompts already. If you wanted to write a 2,000 word blog on multifamily syndication, either you can spend weeks or months figuring out what the right prompts are, or you can just go grab properly written copywriting prompts for free on the web. Progressive thinking is
I
the
love
key
that.
to success.
I love that.
I'll see if I can
It,
find those prompts for you.
and in terms of your content, so you create new webinar content every week, and do you drip those contents to the existing email subscriber list?
I don't. I mean, I don't have the time to create new webinars every week, so I try and create 10 webinars a year.
Okay.
Um, oh, I found the chat GPT prompts, so I'm putting them in chat for you guys. There's 160 of them now. As people get better and better at these, here you go. So it's in chat. Oh, actually, that just went to Madhavi. Hang on, let me go back and make sure that I'm sending it to everyone.
Yep.
Here you go. Click on that,
Awesome.
and you'll see that I've saved you an incredible amount of time because everything's in there. There's obviously ChatGPT ones for marketing. There's also ChatGPT ones for data science, and all kinds of other interesting things, right? Sorry, Tim, going back to your question, what was your question?
Yeah, my question is, do you drip your content to your existing email subscribers?
I very much do, right? So this is, I'm not doing anything, um, that's different from everyone else. I'm just very organized. We use drip campaigns over email. Um, and we tend to take a long time to drift. What we don't believe in, so a lot of people, when they acquire people into their database, they feel the need to send emails to them all the time, and I find that that's problematic. We'll send out an email to somebody, like 2 or 3 days after they come into our database, then maybe one email after a week, and then one email after 3 weeks, then one email after 3 months, then one email after 6 months, that sort of thing. Because we're always focused on building for the future, not building for now. So
Mm,
people are like, but I have to close today's race. And the answer is you might have to hustle for today's race, but what you're simply trying to do is to get people who believe in you and keeping them believing in you, and then letting them decide when they should invest. When you force them to invest, you get a lot less money from them. You might get it more immediately, right?
mhm,
But because you're showing hustle, because you're showing pressure, they realize that. Subliminally, they realize that. And so you tend to get a lot less money from them. So
mm,
we don't believe in subliminal pressure. We believe in basically brand creation and maintaining and improving that brand in the eyes of people, and then letting them invest whenever they can. You might say, you can afford to do this because you're Neal Bawa. The answer is no, it was the way I was from the very beginning. I was willing to take less money in the first few years, but to build a no pressure brand that was based
mhm.
on education. It's a choice. You can make the same choice,
That's
right?
great.
Um, there was a question in chat that I think is pertinent now. What kind of CRM do you use? I use Active Campaign. I use Active Campaign because it is more of a marketing based CRM, whereas Salesforce, as you can imagine, is more sales based. I am in the bucket of people that believe that the marketing department is more important in a company than the sales department. There's lots of people that believe the exact opposite. But I've always believed that the magic is in technology marketing, not in technology sales. So I've raised $280 million, and during that entire time, I've never had more than one investor relations manager. So
Wow.
I pay somebody $100,000 a year, they raise $100 million a year for me. But I have 18 marketeers.
Wow. That's good. Very good point. Um, wow. So your 18 marketeers, can you kind of give us an overall, like what are some of the major roles within those 18 people?
Sure. And again, right now, you're all of those 18 people, right? So you've got to be part of those buckets. So one of the teams is the traditional marketing team. So they are the ones that take care of that active campaign database. They do all of the automations, the drip campaigns. Automations are activities that uh, basically allow you to clean and improve the quality of your database. I'll give you examples of those as well. I gave some examples actually at RaiseFest before I talked about the LinkedIn hack. So they're in charge of cleaning the database, improving it, tagging it, lead scoring it, all of the traditional activities. There's people in that group that are in charge of landing pages. Because I don't have a podcast and I'm webinar driven, I do a lot of landing pages. So every project has a landing page. Every webinar has a landing page. So they do all of those landing pages. They write all the email invites to all of my webinars, all of my content. If I'm sending out podcasts, like you might say, you don't have a podcast. Of course I do, other people's podcasts. So I send out an email every month that basically says, Neal Bawa's top 5 podcasts of the month. And they have the entire podcast there, but they also have some interesting aha moments that were our best moments for the month. And those are in there as 1 minute videos because some people don't want to watch a 60-minute video. So that email gets sent out by that first group. So email marketing has always remained extremely important. I don't think it's considered traditional marketing. I believe email marketing is actually much more important than social media marketing. We used to have 4 people in social media, now we only have one
Hmm.
because our data suggests that we were not adding accredited investors as quickly on the social marketing media side as we thought. So we spend a lot less time. We will still post all the YouTube stuff. We will repost it on Instagram. We'll, repost it on Facebook. But we don't spend a lot of time. I don't spend even 1 second a year on social media. I have no social media accounts. My team does. I'm sure I'm very visible. You guys think that I spend my life on social media. I don't even know what the damn Facebook login is, buddy. I have no idea. I'm I'm I don't have the least bit interest in social media at all. In fact, I find social media is both destructive and corrosive, so I try and stay as far away from it as I can.
Very good. Um, I'm gonna switch gear a little bit. With the amount of data that you study, where do you see this market going? What's happening in the next, 6, 12, 18, 24 months?
I think we're at the beginning of the market adjustment process. So, and there's two different timelines to that adjustment process. The first one is anything to do with interest rates. And that process is fairly well along. I think that the Fed is 3/4 point hikes away from stopping. I think that the Fed is ridiculously overconfident. I don't think that once they stop, they'll be able to keep rates that high for more than a few months before they're forced to start cutting them. So you're pretty late in that cycle. Um, and if you watched my podcasts around the concept of spreads, you'll know that there's going to be good news for multifamily syndicators in the September timeframe when spreads are going to collapse. So most people like you guys are raising money for syndicators. Those syndicators are mostly interested in non-fixed loans. No syndicator wants to buy a fixed loan because fixed loans trap us in there for a minimum of 5 years and probably for 7 or 10. So we want some kind of a floating adjustable rate loan. And right now, those loans are very expensive. Why? A lot of people are like, because the Fed's raising rates. Actually, no, that's not true. The rates are expensive, not because the Fed rose rates, but because of uncertainty. So right now,
Mm,
if you go out and price a floating rate, there's the first half of it is the SOFR, SOFR. There's two components, right? SOFR and spread. SOFR is about 4.5% right now, and that's that Fed funds rate, the interest rate component. But on top of that is the spread, and the spread is ridiculous right now. It's 4.5%, 5%. You know, and you might say, why is that spread so high? It all must also be because of interest rates. No, it has nothing to do with interest rates. It has to do with uncertainty. The spread is low when banks think risk is low, and the spread is high when the banks think risk is high. The moment the Fed stops raising, doesn't have to drop rates. The moment the Fed stops raising, the uncertainty goes away. The moment the uncertainty goes away, the spread portion will collapse. So it might be 4.5 today, but it's going to drop to 1 or 1.5%. And my belief is it's going to drop somewhere in August or September.
mm,
Once that happens, loans get all of a sudden cheaper without the Federal Reserve dropping interest rates. Isn't that cool?
mm-hmm.
Right?
That's
Spreads are amazing things. They really hurt you on the way up, but they can really help you on the way down. So I'm going to try and be in contract on as many properties as I can in August or September.
Oh
Right?
wow.
I don't want to be in contract with properties right now. I have no interest in buying anything until I can get to May or June and I start seeing some early evidence that the spreads are collapsing. There are technical indicators that I follow that show me that the spreads are going to collapse in the next 60 or 90 days. Got it? One of them
Wow.
is the 2-year treasury. So, I drifted away from your question, but it was a very hard question because you were like, what are you seeing in the marketplace? So the Fed, I think, is in an advanced stage. Interest rates will drop in Q4 this year, but the spreads will drop in Q3 this year. You're not too far from Q3, right? We're almost at the end of Q1. So from that perspective, we're in an advanced stage. But the perspective where the game is just beginning is the defaults. So it is my opinion, and I'll give you an anecdote about this, that any property that was purchased by a syndicator in the year 2020, 2021, 2022 that had a floating rate debt on it, right? Floating rate debt. In my opinion, 30% of those properties are now bleeding.
Mm,
That number by July 1st will be 40%, and by December 1st, it will be half.
wow.
Half of all properties that have floating rate debt that were purchased in the last 3 years will be bleeding by December. And so next year, we are going to see a massive wave of defaults. $6.2 billion worth of CMBS properties cannot be refinanced because the math, the numbers don't work for them to be refinanced. So CMBS loans simply won't exist next year. And so all of the people that have CMBS loans coming due, they simply won't be able to refinance their property. You might say they'll refinance. Based on what? Based on what value? They won't work. I'm only talking about the ones that cannot be refinanced, and it's still $6 billion worth of multifamily
Wow.
properties. So we're very early in the default game. The default game really doesn't start until Q3 because there's not enough properties defaulting right now. I mean, there's a few defaulting right now going back to the bank. Nobody cares. So I'm very worried about this because it can create what is known as contagion. Contagion is a psychological state of mind where everyone thinks that the sky is falling. Therefore, the sky starts to fall. Not because it should be falling, but because everyone thinks it's going to fall. So contagion in the industry is very dangerous. So I wrote this magnificent presentation that I created for Best Ever Conference. That's the biggest conference in our space. I present there. I showed it to them. They were pretty happy with it. They were like, "Yeah, this is great." And in the same meeting, I said, "But I don't want to do this presentation." They're like, "What? This is an amazing presentation." And I'm like, "No, I want to start the Best Ever Conference this year. Start first presentation with a presentation that I'm writing called, and I quote, these are exact words: Crisis Bootcamp. Save your
Mm.
bleeding properties with best practices of cash calls, loan and equity injections, recapitalizations, and lender renegotiations. And
Wow.
I recorded a video, sent it to them, and said, "This is what I want to present, and I want to start the conference with it." Normally, you're supposed to start the conference with something really bullish, right? Just to get people going. And I
Right.
said, "That's the wrong approach. You need to get the industry ready. I want my presentation to start Best Ever." They
Wow.
signed off on it. They signed off on it. So I'm starting Best Ever with a really negative presentation.
It's a great topic for sure. Wow, that's really good. Um, all right, Neil, before we transition and open up for Q&A, we'll wrap up this part of our interview today. For those that want to reach out to you, connect with you, learn from you, invest with you, where would you like to send them?
Uh, I very carefully picked a bad spelling for my first name. My Indian name is Navraj Bawa. And I was like, I'm not using an Indian name. I'm in the US, man. And so I first picked Neal, Neil, but then I realized Neil was actually that spelling was pretty popular here in the US. So then I was like, okay, let me pick something else. So I picked Neal, which is Irish, and actually both men and women use it. Um, and luckily, because my last name's not very popular, I ended up being the only Neal Bawa on the World Wide Web. So to find me, you just need my first and my last name, which you know now. Um, if you're interested in joining our ecosystem and really have access to all the content we provide, the best place is multifamilyu.com. So Multifamily University, it's our education portal. By the way, in case you're wondering, we don't teach classes, we don't teach boot camps, we don't have $50,000 stuff. I started doing all of those things and I couldn't really live with myself. I felt like I couldn't be truthful to myself when I was being an educator. Because as an educator, your job is to basically sell butts and seats. So you have to provide a bullish view of everything that was happening. And I couldn't live with it. So I shut that division down. There's
Hmm.
no there's no software subscriptions. I don't have any plan of ever going back to education. So all of the content that's on multifamilyu.com is free and will forever be free. So the one that I highly recommend is called the Toolkit. The Toolkit is updated in February each year. So you go in, you click on the Toolkit. Everything that you need to know about what's happening in the marketplace is inside. Dozens of videos, dozens of reports, dozens of articles, all carefully curated by us. And then every quarter we update them because this is
Gotcha.
content that we are reading. If we find something that's really compelling, we have a process to put it on that toolkit.
That's good. I like that. Multifamily U for university, right? Short for
Mhm.
you, .com.
Yep, .com.
Awesome. All right, Neal, thank you so much for doing this interview with me. Gosh, you've been such a wealth amount of knowledge and information. Yeah, just really appreciate you.
Thank you so much for having me.